Arista Networks just dropped a really powerful quarter. But the headline numbers, that's only half the story. The real takeaway here is what this report is signaling about the AI supercycle. And trust me, it's a big deal. So let's dive in. Yeah, look at that. That's the number that really tells the tale. It's the immediate after-hours reaction from the market. When a stock jumps over 7.5% right after a report, investors are sending a very, very clear signal. So what exactly did they see that got them so fired up? Well, the story starts where it always does, with the main numbers. And for its fourth quarter, Arista didn't just meet expectations, they blew right past them. Let's just quickly run through the top and bottom lines here. This wasn't one of those squeak by a penny kind of beats. This was a clear, decisive show of strength in both demand and execution. Okay, so on the top line, revenue came in at nearly $2.5 billion. That's almost $100 million higher than what Wall Street was modeling. That's a significant beat, and it represents 29% growth year over year. Just fantastic. And that strength, it just flowed right down to the bottom line. Non-GAAP earnings per share landed at 82 cents, beating the street's guess of 76 cents. So you've got strong revenue, strong profits. That's the classic textbook setup for a positive reaction from the market. But here's the thing. A strong quarter is history. It's in the rearview mirror. What truly lit a fire under this stock was the forward-looking guidance. Management didn't just hold the line. They actually raised their outlook, signaling that this AI-driven demand, it's speeding up, not slowing down. So, this is the really crucial point. Arista boosted its full-year 2026 revenue growth target to approximately 25%. If you do the math, that puts them on a path for over $11 billion in revenue. That is a powerful statement of confidence in what they see coming down the pipeline. And here's exactly where that confidence is coming from. Management specifically raised their 2026 AI networking revenue target by $500 million, up to $3.5 billion. This tells you everything you need to know. They're seeing massive, durable demand for the hardware that literally powers AI data centers. Now, huge demand is one thing, but being able to service it profitably, that's a whole other ballgame. And this is where Arista's story gets even more compelling. Management tackled two key issues head-on: the massive AI tailwind and their ability to navigate some pretty significant cost pressures. This was the big question mark hanging over the earnings call. The entire industry is getting squeezed by rising component costs, especially memory. So investors were laser-focused on one thing. Was this going to start eating into Arista's profitability? And here's the answer they gave. Despite what CEO Jayshree Ullal called horrendous price hikes for memory, management held the line. They confidently stuck by their long-term gross margin framework of 62 to 64%. In a market that has punished other companies for any hint of margin erosion, this was an absolutely critical signal of their execution skills. Now, what's really interesting here is who's driving all this growth. Look at this. Almost half of their business comes from the cloud and AI titans, another 20% from emerging AI and specialty cloud providers. I mean, they are sitting squarely at the epicenter of the entire AI build-out. And it's not just about the giants they already have. The CEO came right out and said they expect to add 1, maybe even 2 new customers that will each account for over 10% of their revenue. That points to a demand pipeline that's not only deep, but it's also getting wider. Okay, so putting this all together, what does this all mean for next quarter and beyond? Well, this brings us to the next call, our forward-looking analysis on this. We're going to break this down into 3 parts: our prediction for the next earnings report, our outlook for the stock's price, and of course, our final rating on the company. All right, for the first quarter of 2026, management guided to about $2.6 billion in revenue. Given the incredible momentum from these AI deployments and just their history of execution, we predict they will meet or even slightly beat that number, and we expect those margins to remain stable and right within their guided range. Looking at the stock itself, we expect this positive trend to continue. The key things to watch are going to be continued execution on the AI buildouts and, crucially, holding that gross margin line. Now, sure, any negative news on memory pricing could cause some short-term volatility, but we believe the market is going to keep rewarding Arista for executing so strongly, especially while some of its peers are struggling. So, for all these reasons, our official rating here at Talk Tickers on Arista Networks is Outperform. The company has proven its ability to capture this massive AI tailwind while skillfully managing all the supply chain pressures. And that raised guidance, it provides a very clear path for continued growth, which absolutely justifies a premium valuation.
This is not financial advice.